that, Dave.
Well, a lot is going on. We have it all covered. First of all, we have Larry Shover. He's at the CME pits. Bill Stone on the companies he's buying right now. Adam Shapiro ready to break in with earnings. And Shivani Joshi for insight on Cisco, which, of course, is a Dow component, and Groupon.
Let's start, though, with Larry, Chief Investment Officer at SFG Alternatives. And, Larry, the behavior today was very much tentative, straddling that line. Suddenly, in the last 8 minutes, we started to see some headlines out of Greece, but I guess enough to push it up to the upside, but not enough to give us a real rally at the end.
Right. We're all waiting to see what's going to happen. We're just tired of seeing what's going on in Greece. We want something to happen. There's also some big central bank catalysts that are going to be happening tomorrow and Friday. The market's on hold for that. But, Liz, the big story, we're up against a very big key resistance point in the S&P 500, 1352. So that is what's keeping the market right where it is right now.
Larry, we had commodities going in opposite direction. Gold going down, oil going up. Why the converse relationship there?
Yeah, I think it's all because people have a diverse opinion of what gold really is. Is it a commodity? Is it something that's going to help with liquidity? What is it? And the fact of the matter is, there are some central banks that are selling gold right now because they need to get the liquidity. This LTRO is only going to help for the short term. So gold right now, it's anybody's guess.
Larry, hold in there if you can for us. We have Groupon, which is coming out with its first earnings since going public. Adam, what is it?
That's right. They beat on revenue, David. They came in at $506.5 million. The street was expecting $475.15 million. But on earnings per share, it's a loss of 2 cents. The street was actually expecting earnings per share of 3 cents. One of the things we're going to look for in this report is if they've got people who are fatigued with Groupon, roughly 31 million subscribers. Want to see if people are unsubscribing.
Well,
David?
The subscribers, yes, but obviously their costs are killing them, right? I mean, that's what it's got to be. If they did have bigger revenues, suddenly, Shivani, you're looking at an EPS number that was a loss, and the expectation was that we'd see 3 pennies to the upside.
Yeah, this is a tremendous disappointment. This is the company's first report card, essentially, in the public markets, and it's not a good report card. This is exactly what investors want to get a sense of. Is this company profitable? Can it make money? And it proved in its first quarterly statement that it cannot make money, at least perhaps because of a cost issue, but we don't know exactly what the deal is. We're continuing to get that churn an issue, competition an issue. We continue to see that this industry is still really on its beginning stages of evolution.
Shivani, one of the things that's affecting that earnings per share is the take rate. That is the amount of money that Groupon gets from each particular deal or sale. Do we have any indications yet? Maybe Adam can chime in here as well. Any indication of the take rate? Shivani's looking through it. All right. And I believe we are ready with another earnings. Okay. I believe we have News Corp. Is that correct, Adam?
We have News Corporation coming in, earnings per share coming in at 39 cents adjusted, beating the street at 34 cents. And revenue coming in at $8.98 billion, David. That's a beat as well. The street was expecting $8.94 billion.
And we see it popping over $20 after hours. Of course, News Corp is the mother corporation of Fox Business. They have a lot of cable industries, not only Fox Business, of course, Fox News, a big generator of income for them, Fox Sports. We also have questions about what's going to happen with the Wall Street Journal and other publications that they have. So Liz Klayman, looks like News Corp is doing pretty well.
Well, the filmed entertainment operating income was about $393 million. So you're looking at a move there, certainly that people are going to be looking at. I want to just quickly go back to Groupon, if possible, guys, because, again, they are giving guidance for their next quarter. And I'm seeing for that guidance, they're expecting about 510 to 555 million. So you could argue that they're bringing in some cash here, but the problem then becomes, how do they manage that cash? They have hired a lot of people, so that brings down that EPS number. But I don't know where, Larry, you'd be able to see that they would have thought they'd come in with 3 cents. At least analysts must be disappointed.
I think very disappointed, and that's implicit in what's going on right now. It'd be really interesting to see what happens with their guidance. Investors are going to be all ears with that because there's going to be entrails to that with what happens tomorrow morning with the stock.
By the way, let's go back to News Corp for just a second. We should mention it. It is trading after hours, popping above $20 a share. It has not been above $20 a share since February 2008. It is exactly, the ask price is exactly $20.00. So that may vary between now and the opening tomorrow. But again, this is a high. As you can see, the ask just went below 20. If it does go above 20, We're talking areas, Adam Shapiro, that we haven't seen in about close to four years here.
Well, part of it, too, has to do with the buyback that News Corp announced when they canceled the B-Sky B deal, $5 billion stock repurchase, and that's driving some of the stock gains you see.
Very, very good point. Yeah, they had cash. They did repurchase some of the stocks, and that could have one reason to do with the lifting shares. Larry, going back to you on News Corp, does that indicate anything? Oh, excuse me. Hold on a second. We do have Cisco. This is, of course, very important. It is a Dow component. Everybody's looking at Cisco. Adam, what are the numbers?
That's right. It's a beat on both lines, David. First, earnings per share. Cisco coming in at 47 cents. The street was expecting 43 cents. Revenue, $11.5 billion. Oof. That beats the street estimate of $11.2 billion. This is really important because Cisco has disappointed in its past reports. Remember, they have laid off 6,500 people. They've been cutting expenses. $1 billion was the goal. And their CFO had said in the last earnings call that they were well on their way. So now we'll dive into this report to see what they're saying as far as orders going forward, because there is the prediction, according to Cisco, that by 2014, 57% of businesses will be going on the cloud, and they install the equipment that lets you do that.
Okay, they are declaring a quarterly dividend of 8 cents per share, Shivani. That's 2 cents better than what we've seen over previous quarters' dividends. So that obviously might have some of what's behind this move for Cisco moving higher in the after-hour session.
And I think that's huge, Liz. I mean, talk about coming in with a home run result, a home run report. I mean, we know that the company had warned, the company just popping about 50% off of its 52-week highs. There were a lot of doubting Thomases out there. Not only did it blow through estimates, really sort of easing concerns about any sort of slowdown in Europe, perhaps strengthened by growing demand here in the United States and China. That's what everyone is talking about. We'll look through the numbers. But I think a more significant sign of confidence is that 2 cents per share dividend increase. You know, and I know you both, you and Dave both know this. There are so many calls for cash plays for that dividend income stream, and this makes Cisco a much more attractive stock.
Let's bring in another analyst, Bill Stone from PNC Wealth Management, to talk specifically about Cisco. Bill, there are questions about whether the slowdown in China and Europe will drag the stock down, whether there will be enough demand here to make up for the slowdowns in Europe and China. This is a bullish report. This leads to an optimistic view of that, doesn't it?
Definitely. I mean, you certainly have to look at the fact is Cisco is subject to the overall global economy, like a lot of tech companies. But you're right. I think on the surface, at least from what I heard, we felt pretty good about the earnings that they would come through and beat. We were a little more concerned about the revenue side of things, but hearing that both of those came through, again, on the surface, sounds really good. Second thing is we've been talking for some time about the fact that investors should think about technology, and Cisco as part of it, of what you talked about in terms of return of capital, and that investors would probably reward that. So to us, it is really nice to see that they up the dividend too.
Okay, who's hungry? Let's get Whole Foods numbers. They are just out right now. Adam?
And it's a beat and a beat for Whole Foods, coming in earnings per share at 65 cents. Street expecting 60 cents, Liz. And on revenue, $3.4 billion. The street was expecting $3.38 billion. Trying to see what their plans are for expansion. They have 331 stores in the United States and Canada. They've been paying down debt. Want to see if they have any target dates for when they could get up to as high as maybe 1,000 stores. In previous earnings reports, they've been concerned about food inflation. There's been pressure on their gross price margin, but right now they're beating on both sides. Once again, to reiterate, 65 cents earning per share, $3.4 billion in revenue.
Anything in there about whether they're lowering the price of their tofu cheesecake?
I hate tofu. You'd have to ask about that.
All right, let me get Bill Stone's thought on Whole Foods. This is a company that is one of those platinum opportunities if you get the timing right.
Yeah, and I think, the good news is they came through when we would expect them to. Things that we've looked at is it tends to be the same kind of consumer as you would see at Starbucks. So because we saw good numbers out of Starbucks, we expected to see good numbers here. I think you'd have to be more concerned if you didn't see it. Also, as you can imagine, a better non-farm payroll number also spells typically better news for this kind of company as well. So they see them beating on both sides is, I'll say it's expected, but also, no doubt good news there.
Hey, Bill, first of all, another good thing that they did was they got rid of all their debt. They have a lot of cash, question of whether they'll put that cash into repurchase of shares. But food inflation, a lot of companies that are in the food business are beginning to worry seriously about whether food inflation will cut into their bottom line. Is that a concern of Whole Foods?
Definitely. I think that's what you have to look at. I think margins were about 5% when they reported last time. So certainly if we get a chance or when we get a chance to dig into the report a little bit, I think that's definitely something to take a look at and to see whether they were able to pass that inflation along or what they talked about in terms of what they were seeing.
Folks, we're still waiting on Visa and Prudential. Those are the two names that are lining up. And here comes Visa. Adam.
We got Visa, and this is a beat. Good news for Visa. Like MasterCard, they came in on earnings per share, Liz, $1.49 per share. Street expecting $1.45. And then on revenue, $2.55 billion. The Street was expecting $2.4 billion. Also, Board of Directors announcing a $500 million Class A stock repurchase beginning next year. So Visa is beating, trying to find in the report if they're setting aside money the way MasterCard did for the settlement of this lawsuit that is pending with some of their clients. MasterCard put aside almost $500 million. Haven't seen it yet in Visa if they're getting ready for that kind of thing. But they are a beat on both fronts, Liz.
Okay, Larry, I know it was getting a little noisy in the pits. Is the activity amping up as we see some pretty significant beats here, and particularly Visa?
Yeah, and it's been good to see. I mean, maybe Americans are spending again. Let's make it simplistic. Not that we all need to go into debt, but Visa has had some trouble with that. People deleveraging, people not having enough to spend. Visa beating estimates, and actually they did lower their estimates about a month ago, but beating the Street, that's a good thing, and we'll see what happens tomorrow.
And by the way, that's an all-time high for Visa right now, 108.35. Yeah.
Hey, I want to go back to Bill Stone. There are a lot of questions, though, about whether the new Dodd-Frank bill, particularly the Durbin Amendment that affects how much credit card companies or debit cards can charge to their customers, how all that will affect the bottom line. Is the feeling that all of that negative news has been worked into the stock?
Well, I think, the financials in general, they've had a good start to this year. So I think, they got beaten down, for quite a while here. So I think hopefully a lot of that has been built in. There obviously still remains a fair amount of, lack of knowledge about how things end up playing out. I think the bigger picture is really around kind of the consumer spending and how that plays out, because they will make money, that is Visa, if in fact the consumer continues to go out there and use the cards.
By the way, one final point about Visa, 65% of revenue growth for Visa is non-U.S. So what does happen abroad does affect Visa. So watch for that as well. But good news for Visa.
Hey, we want to thank Larry, Bill, and Shabani for joining in on the earnings whip around. It gets pretty hefty, but we love it. Thank you so much for your perspective. Now, on the day that Groupon just gave its first earnings report, beat on the top line, missed on the bottom line, we've got one of the biggest names in venture capital, the guys who take that angel money and